Yeah. Just put it back after you find. Let's see. Okay. So. Start recording. Okay. Just setting up real quick today. Are you active in investing, or are you kind of like?
I like a trader.
Okay.
Yeah.
Okay. And what do you what type of instrument you trade? Just purely shares?
Forex.
Forex? Okay.
Yeah, I just wanted to see what. I don't really know much traders around the area, so I kind of wanted to just kind of meet up around people.
Yeah. What time frame you trade on Forex?
Day. I'm a day swing trader. Yeah.
Okay, yeah, same thing here. So we pretty much do that with equities as well.
Okay.
But the way you analyze like
It's a little different.
FX is about the same, I'd say. Like if you were to do the let's see, euro dollar. So we probably do it the same way. So this is a euro dollar. I don't know which pair you play the most, but
This euro dollar is a really popular pair, so yeah.
yeah. So that's what you play. Yeah. I mean, yeah. Yeah. I mean, we'll this is how we'll look at it. We'll look at it from like 20 MA and 50 MA. That's primarily how I kind of trade, and then I look at for the pattern.
Okay. Are you mostly equities?
Yeah, I'm mostly equities, but we look at, we're a pretty global macro, I'd say. We look at the world as well.
Okay.
Just to kind of get a view of like let's say Shanghai's pulling back right now and Europe is kind of breaking down. Will it have contagion onto U.S. equity markets? And so that's the kind of like the thinking frameworks. We look at bonds, just to kind of see like, what's the bond yield curve and interest rates.
Okay. So you have to get the big picture of everything. So
Yeah, we look at the dollar the most, but more of the dollar futures. So
okay, yeah, just to see, right?
yeah, so I don't know if you're more of a like you just trade stuff, or do you actually like geek out to like the hey, welcome back.
Good morning.
Was it David?
It is David.
Hey,
Yes.
welcome back, man. I'm glad you liked the previous session. So
I did.
So Aaron, I was just saying you're welcome to sit anywhere. So I was just saying that my question was, do you just typically just trade for trading, or do you look at like, why is the dollar going up and all that?
Well, I use that part of my fundamentals because I would look at DXY or something. I would look at DXY for the Forex, and I would see if it jumps to see if there's a news catalyst or whatever, if there's something on the economic calendar.
Yeah.
I use that as part of my like reason either to go long or short. That's the main reason.
Right.
For geeking out, and I do a lot of reading, but mostly just to add to my fundamentals.
Okay. And do you look at equities ever, or?
I do. I was waiting for that finish line short, and I was surprised that they lost earnings, and then they shot right back up.
What stock?
Finish line, FNSR.
Oh, FNSR.
Yeah, I bought short put options, and then I got the drop.
So you're short put, so you're long.
Long
puts.
bought puts. Yeah.
Long puts. Okay. Yeah.
So
Okay, so you know options as well. Okay, just kind of trying to gauge like what's the skill level. So today, guys, well, it's still early. There's not people online yet. Oh well, JC's on. So we just kind of hang out, chit chat for a bit. But today's topic's going to be focused on REITs. Hey, welcome.
Hello there.
What's your name?
I'm Bernard.
Renard?
Yes.
Nice to meet you. I'm Kay.
Hey, Kay.
Yeah, we're just getting started right here, so we're not talking about today's topic yet, but it's going to be on REITs. We're just going to focus on REITs, not specifically on how to invest in REITs, but more of what business models are these REITs in. So I pulled a ton of investor reports, everywhere from industrial to residential to office space to data centers, just because we talked about almost everything else. So it gets pretty hard after so many sessions. So this is my way of trying to mix things up. And so today I hope the key takeaway is to help you guys understand. I believe we met before, right? Or
Yeah, you and I have.
oh, you're Jeff.
I'm Jeff.
Oh, hey, welcome, man.
You have a new person now?
Hey, welcome. I'm Kay. Feel free to have a seat anywhere, and we're just gonna chit chat about investing in the stock market, I guess. Well, we'll give it like 15 minutes before I go into it. I just want to make sure everything's okay on my end. So test. Okay, that works.
Is there a desk Wi-Fi here?
Yeah, it's on the wall. There's one here. There's one right there. I don't know if you can see it. KW Cup 479. Yeah. So real quick, let's just talk about, I guess the stock market and, all right, whatever happened this week, and then let people come online. So let me get this out. Okay. Because usually we have more people online. Okay, any questions about this week or about the club or what we do? I know we have some new faces.
So this is my first time
Mhm.
for like the introduction.
Okay,
Like,
yeah.
what things were-
Yeah. So this is technical discussion number 87. So 87 sessions of 2 hours of talking about investing. It took me a while to really define what this club is about. But if you're familiar with like investing in general, there's traditional assets and alternative assets. So let me just search up a framework to show you. So traditional, alternative, investing. So in traditional investing, it's like stocks, bonds, and real estate. In alternative investing, it's like, options, private equity, hedge funds, real estate, but like commercial, industrial, office. We talk about commodities. So this is an investment club, but I would categorize it as a alternative investment club. That literally took me like more than like 80 sessions to kind of define. Because people be coming in here and I realize that there's too many people of different skill levels from like beginner to intermediate to advanced. And then also everyone's playing on different time frames, right? Some players are more like 5-minute charts, some players are hourly charts, and then some are like me, daily charts or swing traders. And then some are just like monthly charts and investors, right? So that's the complexity on my end, at least when people come in and I try to, I don't know, work it together and help everyone get onto the same thought, I guess. But overall, yes, this is a alternative investment club. So we talk about everything that is pretty sophisticated versus, I don't know, if you go to a financial advisor, they'll probably go as far as like stocks, mutual funds, right? Here we go, stocks. We could talk about mutual funds, or we talk about ETFs or ETPs, exchange traded products. And then under that umbrella is ETFs and ETNs, exchange traded notes, so like triple leverage stuff. So there are securities out there or instruments out there that you could trade with 3x leverage. Some sophisticated hedge funds would go short, let's say you go long at 3x and you short a inverse 3x. So you got free 6x leverage if you think about it. Yeah? Did anyone geek out to that? All right, yes. Okay, I mean, we're talking, okay, when you leverage, let's say, for example, you buy a home, you got to get a mortgage. That's essentially leverage, right? But you got to pay principal and interest on that. Well, if you're in the equity or capital markets and you know how to get free leverage, you're getting 6x leverage for free. So you're not paying interest. Sorry, I guess it's a little too technical, but yeah, there are sophisticated methods that average people will never know because I guess you don't put in the time to study or any of that. So for a little introduction, a little background about myself, I worked in finance. I studied finance and economics, worked in finance, worked at Silicon Valley Bank, worked at Morgan Stanley. And then I transitioned to tech, worked at like Pure Storage and another startup called Couchbase, which is a database play, and then GE Digital, and then now I'm a realtor as well. So I've been teaching this club for a year and a half. After the year and a half, we used to be out of the Milpitas Library. After that year and a half, I got my license, and then now we're here. So it's in a much better office. It's bigger, and you guys got a big screen projector. Is it blurry? Should be okay, but that Euro doll looks kind of blurry. So let me just make this clear for you guys. Let me know if you can't see, or feel free to interrupt any time if you have any questions. There we go. I did a lot of career jumps, but the thing that I've been consistent at is probably this investment club. So it's been about almost 2 years now teaching. I teach for the sake of, originally this club started off with like 2-3 guys at Starbucks.
Okay.
Yeah.
Your video is not showing up.
Oh, sorry.
Waiting to-
Thanks, man. Yeah.
The other 3 people.
Yeah, so originally this meetup started with 2-3 guys at Starbucks, and it was kind of unorganized. Well, it still is, I guess, maybe. And then after that, we got into the Milpitas Library and it started growing, and then now we're here. So where we go next is just keep meeting investors. The cool thing about this meetup is that you guys don't see it, but you're coming in as like a consumer of like my content or whatever. I'm the producer of the content, right? But on my end, I get to meet a lot of like interesting investors, developers. Last week we met a developer. He came in here, and it's just putting yourself out there, meeting new people, building an investment community. So if you guys are starting out or looking for that career or passion in life, for me, I came to realize that I guess I'm pretty passionate about building an investment community. It's the investors that I enjoy talking to 99% of my day. I realize that you can't talk to family about finance all the time. They don't like that stuff. So this is where I kind of, offload my finance stuff for the people who want to listen to finance. So that's the introduction. Moving forward, I hope to make this club even more sophisticated, meet more sophisticated investors and technology experts, and just get better at this gig we're doing, right? So we dabble, mostly public markets, but we talk a lot about private markets as well. So if you want to hear about venture capital, private equity, I read textbooks on them just to kind of understand what they do. A lot of the equity plays that I do personally, like let's say for example, Splunk, Workday, I can't even remember all the names, but these high level names, right? Like Workday, it's funded by Amazon, but you would only know that by researching the private segment or the private transactions. So I like to look at private markets to kind of gauge what equities or what stocks are in the public markets so that I could get a great play. So for example, I'm bullish on Workday. This is the security right here. This is Workday. We're looking at a daily time frame. It's all above its moving averages. Looking pretty bullish. The last gap, it gapped down, but it's retracing pretty hard. So if we could get a 100% retracement and move higher, I would say that's a bullish indication of further higher prices to come. But I like the security, I don't just look at it from a technical perspective. I look at it from a sales or revenue perspective and also an earnings perspective. So we also do fundamental analysis as well. So I want to see, what players have skin in this game. So I know Jeff Bezos, Amazon invested in this company, and I know they're particularly long-term viewing. So I kind of leverage that and check the size of Workday, how big is it, and kind of anticipate how big further Workday could become. Yeah. So
With this website you're using?
This one right here?
Is it a subscription?
Yeah. So I subscribe to a lot of software and technology. I think I spend probably maybe like 5,000 a year on software. So I use Guru Focus for my deep fundamental analysis. I pay I think about $800 for this. Hey Shakti, it's been a while, man. Welcome back. I pay for FinViz as well. This is about $350. I also pay for TradingView, but TradingView is more like a cloud charting software. That's more of a social thing. I pay for Real Vision. This one they had an offering. They said if you want to be a Real Vision partner, you'll have this subscription for years or whatever. I paid $3,000 on the spot just to have this subscription. Basically, it's a Netflix for hedge fund managers. So I watch this pretty frequently, just to kind of get my global macro game on point. I think that's pretty much it. I guess you could say the tools I use is we get pretty sophisticated as well. The most recent tool, we also have a business tool that we could hunt business owners and their contact information. It's called Sales Genie, but that's another topic because that's the SMB topic where we talk about small business and just analyzing them. We haven't really got into buying them out, but the most recent one is Property Radar. I forgot, it's $80 a month, so $800. But this is a very powerful tool that I use to kind of get contacts in real estate for opportunistic real estate, potentially real estate investing, or just finding those real estate deals. We'll get into that a little bit, or maybe another session. But overall, that's the technology stack that I kind of leverage to get what I want to do done. But going back to it, so it's still a little bit early. We have some people joining. Okay, so I like to take a moment to kind of go around the world analysis. It's just a standard thing that I do, and we'll do it kind of quick because today we're going to talk about REITs and then a little update on my end. Just waiting for some people to come on. Maybe we'll officially start at 10:15. So let's do a quick around the world analysis. what happened this week in the stock market? Everything looks fine, guys. Believe it or not, things look fine except for interest rates going up. But markets to me overall look pretty good. So this is a daily view on the S&P 500. If you guys know already, I religiously look at the S&P 500, right? And to me, it's above 285, and we're about to break out right here at 290. So it's already a close above 290, which is 90 is a sort of a psychological price, but 300 would be a better psychological whole dollar number that I would like to see. So overall, it looks like we successfully bounced off the 20 EMA, and we're going higher. So S&P 500 is going higher. That means stock prices are going higher, right? And how else can we confirm this? We could look at another angle, look at QQQ. Same thing, this one's hanging out above the 20 EMA. Looks like, we're kind of uptrending already, right? With the 50 EMA, my orange line right here holding. So NASDAQ looks fine. Dow Jones finally retracing, and it's looking pretty bullish as well. It just hasn't fully retraced the February pullback that we had. So this is the February pullback right here. So as you can see, we've been in consolidation for like a very long period, but it looks like it wants to go higher off the 260 right there. So that's the Dow Jones. So we did QQQ, Dow Jones. Let's do small cap. Actually, let's do mid cap. So if you understand the structure of the stock market, right? There's large cap, middle cap, small cap, micro cap, or penny stocks. This is the middle cap stock. So this is me analyzing the structure of the equity market. So overall, this one looks bullish as well, right? It's also above, holding the 20 MA, above 370, setting up a bull flag right there. So that's looking good. It looks like it's going for another breakout right there. So that's middle market IWM. So in my 401k, I hold pretty much small caps and some mid cap. This one looks good as well, right? Still holding above 170. I like that. That's the quick look around the U.S. markets. So now let's jump to a bigger level. Let's start looking around the world. U.S. markets look good. That's my takeaway from what I saw. Real quick, let's look at volatility. Volatility is breaking down. This is what volatility looks like. So name of this club is Volatility Club, basically because if you really geek out the finance, these engineers have created these options. I guess options people or futures people are the most sophisticated traders, not so much the most sophisticated investors. But basically, they engineered a product called VIX, and they created instruments that you could trade VIX directly, VIX futures, VIX options, and all that. We do look at the analytics on volatility just to kind of gauge where short to midterm direction wants to be. But as of right now, what I see with the VIX is it's kind of breaking down. So that looks bullish for U.S. equity. So let's look at the global markets, right? Now that we finished analyzing U.S. equities. And I apologize for people who hear this all the time. This is just a routine that we should do just so that we could solidify our global macro analysis, right? So we did that one, we did this one. We also looked at Russell, now looking at Nikkei. So Nikkei was looking kind of scary, right? But this is what it looks like. It's been pretty bullish this week, so not bad. The scary part is actually European markets because it looks like it broke down. Oh, I can't find my mouse. Oh, there it is. So it broke down right there, but it looks like we're going to get a retrace. So I don't know if it's going to hit its head on resistance right here for the Euro Stoxx 50 or the DAX, but we don't want to see that the European markets fall because it could be contagion to U.S. markets. So my U.S. stock positions might go down if that's the case. But anyways, that's the quick global macro, or at least the most important exchanges out there. One exchange that I do want to note also is probably the Shanghai Index. So I look at Asher. Let's look at Asher. Asher is an ETF that tracks the Shanghai Index. So again, we're doing this around the world analysis, just to again solidify your understanding of what's going on in the world. Continuing downtrend. Looks like it might be breaking down further. This is the Shanghai Index, by the way. So ever since the beginning of the year, with the dollar rally and the emerging markets getting hit, this is emerging markets right here. We're expecting this one to potentially go lower. So right now I stay away from Chinese stocks because I think a lot of people think that Chinese stocks might go down further. Though I'm a big fan of like Tencent, Alibaba, and Baidu. If you guys don't watch those securities, they're like the top Chinese stocks in China. So I'll attempt to be picking those up in a clean retrace or a clean reversal. Right now there's a lot of fear, uncertainty, so this might have further breakdown. As you can see already, this broadening wedge pattern I just flipped over to the weekly. If you didn't see, that's the weekly. Let me know if I'm going too fast as well, okay? Because this is like a little bit more intermediate today. So we have a broadening wedge, which is kind of bearish. I didn't draw it as objectively as I like, but if we could bounce off the 160 and start heading up, maybe that'd be a quick trade. But I'm kind of lazy these days, so I want to hold a longer term position. I'll wait for the global macro to play off. I'll let Shanghai or Chinese stocks to kind of rest before I take a revisit. But that's China. That's what I'm seeing in China. So not a good condition for China, but bullish case for USA, because if your Shanghai index is tanking, right? You got institutional Chinese investors who need to exit their position and go and run to a safe haven currency, the dollar, right? So I'm looking at dollar rally. If dollar rallies, then if they transfer the dollar, then hopefully they'll transfer the dollar assets, which for me, I already have a position in, I hope. So that's the bullish case for USA right now. But that's indices, guys, around the world to look. Energy, let's look at the weekly real quick. Anything notable? Nothing much on oil futures, so I won't speak much to that. Bonds, continuing that breakdown. Check it out. I don't know if you can see it, but bond 30-year breaking down, 10-year breaking down, yield curve. So you get an idea of what the yield curve looks like for this. But we got the 5-year and the 2-year breaking down. So what happens when bond prices go down? Because interest rates are going up, because they have an inverse relationship. So the market, at least right now, is communicating to us that they expect interest rates to go higher. So if interest rates go higher, further headwind for the home buyer, the corporate borrower, any investment fund that's leveraged, with USDs. That's the going concern. Because if you borrow and interest rates go up, And, well, for a mortgage borrower, it will cost you more at these prices, right? Any slight increase. So people ask me, do I see a decline in real estate prices? Now that I'm actually engaged in the real estate market, I have a better understanding. I'd say I don't think we'll see a crash, like a huge price reduction in real estate, just because this area is insulated, Silicon Valley. But I think prices can decline, right? I don't think things go up forever. It can decline, but I don't think it'll crash. And I'll explain my viewpoint. Reason being is that interest rates are already so low, and they're rising interest rates, right? Or they're raising interest rates, but how much? It's coming off a low. So even if they raise it, it's still, hey Sarah, long time no see. Yeah, so even if they're raising interest rates off the low, I mean, it's still low enough for people to consider a cheaper price. You get what I'm saying? Like the next mortgage buyer might be like, oh, it's coming off the low, I can still borrow and then buy and hold up prices. You get what I'm saying? Because the dynamic is, interest rates is like the thing around the world, right? If you raise interest rates off of like printing money, now we're taking money out of the system. Everything's unwinding. So as everything unwinds, it's kind of like corporations, it costs corporations more to borrow. If it costs corporations more to borrow, then they have less money for projects. If you have less money for projects, then you have less money to hire. Less money to hire, you're equipping people with less money to go borrow. So there's less jobs, right? So less jobs means less equipped buyers to go pump up prices. So one key indicator of home prices is definitely hiring. So what I notice is, hey Yawin, hey man, what I notice is that, what was I saying? So, a commercial real estate strategy that I noticed, a lot of developers, they will go nuts and start developing around corporations. Let's say like a Workday in Pleasanton. If you drive around there, Workday's it's probably world class, or at least enterprise class. So it's a great company. And Workday keeps doing well, they keep hiring. You see a ton of developers around Pleasanton just building like crazy, right? We're not just talking residential developers, we're talking about office buildings, we're talking about healthcare facilities, retail shopping centers. So it's hot over there, right? So if we're on ground zero and we want to search opportunities, we might want to consider stuff like that, right? Just an interesting thought. So anyways, that's how analyzing all the bonds make a lot of sense. It's important to look at all of that, because it kicks back to everything else. Soft commodities. I won't speak too much on this. Not a super duper expert, but you know, one thing to know is lumber prices tanking like crazy. So this is probably tailwind for a developer, right? If you're a developer and one of your costs is lumber, a residential developer, you're building homes, and one of your main costs is lumber, then now you have you could purchase cheaper lumber, so your margins are now bigger. So maybe moving forward in the next few quarters, their financial statements might look a lot better, right? So it's a way to play, you know, residential, I guess, you know, real estate. But then this could be a headwind on existing home prices too, right? Because this is where this is where I'm not too sure. I'll disclose that, because you know, if the lumber keeps going up and you already own a home, well, your existing lumber is pretty valuable, right? So you got that extra premium price in. So I don't know the exact economics of this, just because I'm
Can I
not.
ask you a question?
Yeah.
Can you go back to the last page?
For the softs?
Right, there.
Mhm.
So if that's suggesting that coffee is going down and Starbucks sales are going up, wouldn't that suggest their margins would go up because their costs are going down?
Yes.
So
Yes.
is that suggesting that Starbucks as a general stock like that was likely to continue the trend for a certain period?
Yeah, you could say that. Yeah. Right, because if you're a true business owner, right, you think about margins and stuff. So if you're Starbucks, you're purchasing coffee futures, okay? You have to purchase those futures just to kind of hedge yourself. So these future contracts, they have the right to purchase a lot of real coffee, just because that's part of your operations. Now, I didn't read the investor relations report on Starbucks, so I don't know the exact, you know, if they themselves go purchase the coffee from through like futures contracts, through like a farm, or do they purchase it from another company? So that's something I want to know before I jump to a conclusion like that. Yeah.
Yeah, the one factor would be, like you said, if they already preset the price before ahead of time to buy the coffee at X amount of dollars, and then coffee
Yeah.
way down is gonna hurt them.
Yeah.
But if they're actually buying it as the price goes down, it's gonna help them quite a bit.
Yeah.
And that's one factor that's gonna influence that, but other factors would be like if you have like a huge, you know, boycott of their business,
Uh-huh.
it's gonna hurt them more than this price is helping them, so it's kinda like one piece of the puzzle.
Yeah. So yeah, that's, you know, we could just keep watching and kind of see what's going on. So going back to softs, I won't speak much on this. Metals, gold not really performing, though the whole, if you understand sovereigns and what's going on right now, gold makes sense, right? Because the system is flawed, at least from a lot of money managers' viewpoint, and I kind of agree with them what they say, just because we're in a world today where every major sovereign, right, could print money the way they want to, by taxing us, by borrowing on our behalf. So it makes sense, and that's why the introduction of cryptocurrencies makes sense, which we also look at cryptocurrency. So Ethereum or Bitcoin still holding 6,000, something I'm looking at, and Ethereum broken down below 300, but now holding 200. So we'll see how this market develops. It's still very adventurous, I'd say, but that's the crypto market. We won't talk so much on that. But back to the futures. So metals. It's interesting because I learned that a lot of sovereigns they hold metal in like, you know, a few different jurisdictions, just so that, you know, you're kind of hedging yourself in a way. I was geeking out to that pretty hard. Anyways, nothing much there. Meats, again, looks like food demand's going up for these two, but not so much lean hog. I can't speak too much on commodities because I'm not a super commodities expert, though I could apply technicals to kind of get an idea. Same thing here. I can't speak too much about this. Maybe one day when, you know, we run out of topics to talk about, I'll start reading about commodities. But overall, this is what for currencies, we mainly look at the dollar. So dollar looks like it's kind of just consolidating. I'm expecting this to maybe go sideways or potentially higher, because as interest rates go higher, it's more attractive to own the dollar. And so if you're unwinding everything in the world and everyone's going to run psychologically to a safe haven currency like the dollar, then we can anticipate dollar rally, right? And that will create a chain of effect back to like stock market and all that. So that's the around the world look, guys. Did you have any questions on that? Was that a little too technical or too intermediate to advance? Is that okay? You guys okay? Okay.
Can you say it again, why
Yeah, because I mean, the longer you analyze the world, right, and especially technology, because engineers have to develop like, are you an engineer, right? Okay, yeah. So you probably understand like technology stack and how a physical data center has sophisticated software and hardware, right? But then it's like infrastructure software and then end user software. So very similar to that framework around the world, the dollar is infrastructure. The dollar currency itself is a major infrastructure around the world because it seems like as a dollar, every other currency sits on the dollar. So we as the USA, after World War II, the dollar became super popular because we had the most gold reserve and the most factories or the most resources to say, hey, you got to start using our dollar. So more than 50% of transactions, commodities transactions around the world is on the dollar. So we have to carefully watch how the dollar moves, and us as Americans or our government uses the dollar as a weapon if you think about it hard enough, right? Because the way we shift our interest rates shifts our dollar, and the way we shift our dollar makes every other player on the dollar react to it. Yeah.
And the way we also sanction.
Yeah. So just analyzing the existing, let's say, data center infrastructure or dollar infrastructure, or a dollar technology stack or a dollar currency stack, it just looks like, I probably rather be in the dollar than cryptocurrencies right now.
What was that website you said about evaluating small businesses, sales?
No, that's more for sourcing leads for small business.
What was the name you said?
Sales Genie. So I attempted to be a business broker a while back, and that's why I'm used to kind of source business owners just to build up contacts.
I see.
But what we use to analyze businesses is bizbuysell.com.
Yeah, no, I know that one.
Yeah, and we'll occasionally look through here from time to time just to check market multiple. So everything's trading about the 2 to 3 multiple. It's funny how like in a overvalued environment, right? Stocks, bonds, commercial real estate, even residential real estate, everything's overvalued, but I don't see that overvaluation drip into small businesses. So it seems like no matter what, you can still buy a business and break even after 2 or 3 years. But it's just, do you want to operate that? Do you want a second job, a second 9 to 5? That's the hard part. But what I learned about small businesses, and as you scale up to middle market businesses and enterprise level businesses, as you scale up, you purchase like I don't know what, let's say $10 million in sales, you actually start doing less work. So it makes sense why these investment bankers who focus on middle markets, like boutique investment banks, or Goldman Sachs who focus on enterprise level deals, enterprise mergers and acquisition. I mean, those transactions are huge, but the investors don't really do anything, right? The investors is basically me buying shares. So this is like the most powerful activity one could do in terms of like, I guess, influencing the world. If you could like accumulate enough shares and start moving markets. But okay, that's some shady stuff. Anyways, that's why you don't play penny stocks, because penny stocks are too small, and even the smallest, investor, big time investor, can move it. That's why we look at larger cap stocks. So that's the around the world look. That's what's going on. Let's jump to today's session. And I'm assuming everyone will be sort of online by now. Wow. Oh, we got like 11 people online. Okay, welcome guys. Nice to have you guys back online. Believe it or not, Volatility Club is still going, now branded as the Alternative Investment Club. So today's topic, we're going to focus on REITs. And it's just really me going over a ton of REIT reports, investor reports. But I wanted to give you guys an update on my part, because I think I had some questions about, hey, what have you been up to, Kay? Or I'm curious about, what's going on in your life. So I'll give you guys a quick recap, things that I learned from the latest activities, or everything that I've done thus far, right? After maybe like almost 100 meetups already, what did I learn and all that. So first part is real estate activities. Yes, real estate agent role, I'm learning that it's actually really fun because I get to go see different houses all the time. So that's that's exciting for me. So every week I've been doing an open house. I actually have one today. So my hard stop is probably at 12:30. But if the conversation is really good, we could keep it going. But I've been doing an open house every week, and I've been learning a lot of technical stuff about home, right? The foundation, the material, etc. So if you guys want to learn, talk more about that, or want me to talk more about that, I guess I can as well. But typically everything is if you read the contracts, the real estate contracts, everything's disclosed to you. So pretty cool. I'm also learning about real estate as an investment, and then also building a deeper understanding of the average individual's largest investment position, right? Because when I'm doing the open house, people come in, they ask you all sorts of questions, right? We get people who obviously want to buy the home, but we also get people who come in that pretend to shop for the home, but already has a home, and then towards the end they're like, how do you feel about the real estate market? And so that's where I get to pitch the whole global macro interest rate and my investment club and all that. So it's kind of cool, yeah. But I definitely see the concern. Now I'll give you guys some examples as to, how have I developed a deeper understanding of real estate as an investment position. It's typically, yes, the average individual's biggest investment. When I worked at Silicon Valley Bank in private banking, all the balance sheets I've seen, right, even if you're high net worth, meaning like you're 2 million and up in net worth, most of them still had real estate as their biggest assets. Now, as you cross like maybe 20 million and not 20 million, maybe like lower than that. As you cross like 10 million in net worth, it starts becoming less real estate. So those were the particular balance sheets that I really geek out to. They were really venture capitalists who had like maybe 3 homes worth like 3 to 5 million in total, but they had like 15 million in venture capital startups. So 15 million in equity. So as you get bigger and you start to scale your net worth as an individual, right? You want to get richer or whatever. The efficiency is all in equity, from what I've seen, right? And the biggest balance sheet I saw was 2 billion. And this gentleman had 6 properties, one in Hawaii, that was like 6 million or whatever. But that was just like total of like maybe 10 million out of like 2 billion, right? So where are the other 2, whatever, hundreds of millions, they were all in equity positions, stock positions, venture capital positions, private equity positions. So yeah, maybe one of these days, if I ever get there, I'd like to operate at that level, right? Kind of fit myself into the market. But to fit yourself into the market, it really, that deal flow really requires technical knowledge, a technical network, or maybe a high net worth network, and yeah, just persistence to get into that network, right? Well, anyways, so keep in mind that the individual's biggest position is typically real estate, right? They'll have like, let's say the average balance sheet in the Bay Area. We know everyone here is a millionaire on paper, right? We know everyone has bought their home for maybe, let's say 500K, and now the home's 1.5, so they're sitting $1 million in equity, right? And I don't know if they borrowed against a home, but that's typically the bulk right there, 1.5 million. And then they'll have like, 1 to 300K in like a 401K, and then like 50K in a cash account, like a bank account. That's the typical profile of an average person, I'd say, on the west side of the South Bay, so Cupertino and up. or Cupertino to Santa Clara to Mountain View and up. Maybe the profiles on San Jose to Milpitas and Fremont, slightly lower but pretty similar, right? But that's the typical profile. So if you know the typical profile, everyone's sitting on a lot of gains, they might want to exit their position because you took a position that's 500K in real estate and now it's at 1.5. So that's why I became a real estate agent, because I noticed that the economic rubber band is stretched to one side and it needs to come back to the other side. So I'm providing a service of helping people get out of their investment position to take their gains. But from a legal perspective, you can't scare people into selling their homes. No, seriously, that's not even a joke. But anyways, going back to it, that's where I see the economics right now in the real estate market. What I learned about real estate investing is that very similar to business as well, very dependent on the margin and market appreciation. And I'll give you guys 2 examples. One example is this $2.3 million property, right? And the previous owner was a flipper. So she bought the home, flipped the home. She bought the home for 1.2, put in 500K to make it 1.7, and put it back on the market for 2.3 or 2.2. So she's going to pocket 500K. Now she maximized the lot. The lot, let's say, is 5,000, and the city allows you, let's say, 50%. She maximized the property to be 2,500 square living space. So the next purchaser, they can't expand anymore. There's no value in that. Yeah.
She hold that for over a year? Or
She held it for 2 years. Your reaction's like,
Long-term return.
yeah. So that's called a buy and hold, but then she's also buy, hold, and value add, right? That's also present in commercial real estate as well. But what I learned is that the next purchaser, you know, at 2.2 million, you gotta be earning like what, more than 600K family? Can you sustain that for 30 years? And what are you betting on? You buy 2.2, can you add value to that? No, it's already maximized, right? The only thing you're banking on is the appreciation. So if there's no more appreciation, that 2.2 could be 2, and then you'd be down 200K in equity. But that's, you know, I'm not a super expert at that, but I could detect, you know, when I see a property that has value in that sense. Another example of this is that, you know, yesterday I was at open house, we had insecure neighbors come in. Like usual, they pretend to shop the property and pretend like they're a buyer, and then they'll slowly, you know, inch towards you and say, hey, how do you feel about the market and all that? And they felt really concerned because they bought the market recently. I think it was probably late last year, like December last year, and they just felt like the market slowed down. And they're just, you know, asking me for consultation, like, hey, do you think the market's slowing down? You know, we're concerned about the price that we got in, and you know where the prices are moving, right? So I'll be honest, I can't predict global macro. Who the heck could predict global macro? I can only speak in terms of probabilities of global macro. What I see as like the stretch economics and where I see things might go next. You had a question?
No, the thing that's going to help housing in this area basically is, you know, the unemployment is the lowest ever and all those kind of things, the economy.
Yep.
higher stock rate.
Unemployment.
But the thing that's going to hurt housing in this area is going to be the new tax laws that just passed last year.
Yeah.
Where they leave you to $10,000 in deductions.
Yeah.
If you're buying a $2 million house, you're going to outdo the $10,000. You can only do $10,000 with you know, property taxes and also for your state income tax. It's called SALT.
Yeah.
And you're going to get that, you know, automatically going to get the 10,000. You won't be able to deduct the remaining 15,000, whatever it is. So that's going to hurt. So it's got two things going at the same time.
Yeah.
We'll see what wins that.
Okay. You got a comment as well, or okay?
It's, you know, like any market top, it usually the process when most value buyers are replaced with speculators.
Yeah.
And housing market is the same. And for speculators, really this 10,000 deduction is not important at all.
Yeah.
That's right, that's
So
right.
that's,
But the problem is when you get into your ratios on your income ratio, you know, you're supposed to get 43%, and you're topping out at 43 at 2.5 million. And when it goes to 3 million, that ratio is not going to work to get the loans qualified for. So just from that aspect of it, it's showing that we're in the ninth inning with it as well. Just the ratios, income-wise, and the income is not growing as fast as appreciation. And when you do the math, the ratios are not going to work.
Right.
think about real estate price in the South Bay. Let's say Microsoft is kind of company which makes a lot of money on paper, but if you take better look at their economical kind of situation, they buy businesses and we don't know what's gonna happen.
Right.
But anyway, they might crash at some point. And let's say they close this campus in Sunnyvale, LinkedIn, and some others. What is gonna do to the real estate market?
Well,
Another candidate is Nokia, which has a lot of real estate, a lot of campuses, and the company is not doing well.
There's no inventory though. Where I live in Saratoga, there's probably 10 houses under $2 million.
That's right.
And
Yeah.
every house across the street from us sold for cash,
Yeah,
$500,000 on grass.
So it's a
in
supply
the last
issue.
3 months.
It's a supply
So
issue.
I mean, I think there's plenty of cash out there for people that want to spend between
And-
2 and 5 million.
And,
right
and
now.
going back to what I said about interest rates, right? We're coming off lows, so people will still borrow at a little bit higher low. You get what I'm saying? So they're still equipped with cash. So I think prices can decline, but I think it could hold. That's just my take on where.
Right now, the good outweighs the bad, right?
Because it's not like, you know, interest rates are at 5 moving to 10. It's like 0 moving to 5. You see the difference there? If it was 5 moving to 10, that's a different story. People will be like, 10%, I'll step back. I won't borrow. So then they don't have cash.
Yeah.
But if it's 0 to 5, they'll be like, I'll still stretch for 5.
Yeah, the interest rates,
So-
you're right about that. The only thing about prices, they went from 1 million to
Yeah.
2.4 million.
Yeah.
You know, so with
Exactly.
the math on that-
You're right. So now it's more sensitive because the price is higher. Exactly. It's interesting.
Net,
What-
I mean, everything is good for housing right now. Net is just showing some
Yeah.
cracks that are showing
Yeah.
up. And in New York, as you know, they're already top, right?
Yeah.
So the really expensive stuff is coming down tremendously right now.
Yeah. So I mean, overall, my RE activities as of late, it's been super fun and super fulfilling because you're building equity. And the people come in here, I always, try to, encourage you guys, go out there and try to build your own business, build your own equity, because I think that's the way to go. But that's my opinion, right? Some people prefer to work 9 to 5 for forever, but I say go build your own equity. That's my model. RE investing. So because I'm constantly in this market, I come across many opportunities, or at least from my eyes. That's what I notice. It's pretty interesting when you go out there. Because people actually say, hey, I need an addition, I need a renovation. Well, hey, I need to get some referral fees from this. Or, hey, I want to sell my home later. Well, great, that's my pipeline. So finding deals is actually pretty fun. You just got to be in it to get it. That's literally the model. Be in it to get it. So I do have a better feel of the real estate market as a whole. So I think our insights in here as an investment club, as an alternative investment club, is getting a lot more sophisticated. Yeah, I like that. So my question to you guys is, would you guys be interested in hearing further discussions about investment opportunities in real estate and how I kind of approach them? Is that an interest for this club or more of equity markets?
I think so.
You think so? Yeah, because I like to change it up because, dude, I mean, we talked about stock markets for like almost 2 years now, man. It's we got to change it up a little bit. So I know some people don't like changes, but that's why I want to politely ask if we could change, from time to time. So today we're going to be analyzing REITs, at least the reports, for like the last hour, judging from my timing. Rising interest rates. So we were just talking about it. Yes, rising interest rates equals headwind. That's my kind of view on that. At least in my opinion, this is headwind for the entire world, not just real estate prices. Because if you understand global macro, you'll see why. But interest rates are rising from a low, and that's what I was saying. Right? It's 0 to 5, not 5 to 10. And so if you think hard about it, even if home prices were to decline, money borrowers can still access cheap capital, or relatively less cheap, but still cheap, okay? and ultimately sustain real estate prices. So that's the weird trade-off right here. Like, what the heck? I think people are too scarred from 2008. Now, I'm not a super expert on this, but it seems like, prices could still sustain. Hey, welcome. What's your name?
Naveed.
Naveed, nice to meet you, man. I'm Kay. Welcome to the club. You can sit at a table if you want. Feel free, okay? We're just kind of doing some quick updates, and then we're going to go into REITs. Just out of curiosity, are you guys like pretty, we got some new faces. Are you guys like pretty advanced investors, or kind of like what type of investing you guys do, or just kind of dabbling, or? Yeah, you're kind of dabbling? Okay. How about yourself?
Define advanced.
Yeah, I mean, okay. Would you say does anyone do alternative investing, which is like options or private equity or whatever, right? Or opportunistic real estate, off-market deals, stuff like that. Okay, so.
But that's more adventurous than advanced.
Yeah, I guess.
Advanced is kind of, okay, here's your capital and what you do with it.
Yeah.
Are you investor, so you looking for appreciation, or you're a trader and you're looking for cash flow?
Right.
Now, what is your current trade, and that's how advanced you are.
Yeah. So yeah, I'm just trying to get a feel of like where you guys stand, so I can kind of tailor the conversation. But we'll move ahead from that. So prices can decline, but it appears that prices can also sustain due to current underlying lending economics. S&P 500 and all other indices will continue to be my preferred macro indicator. We're having network issues. So people online, let me know if you're feeling okay. How about 13 people online? Wow. Okay. Now that's the real estate activities. We're just doing a quick update of what I've been up to for like the members who know me. Trading activities. Trading is still my bread and butter, guys. Like, it's like one of the best like things to do in terms of like low amount of work and high amounts of payout if you could sustain your risk reward correctly. Trading continues to be the easiest method to make money. My latest opinion, or continues to be. Scaling is where I have yet to improve on. So in the beginning, when I first traded options for the very first time, my first trade was a mini option on Amazon. A mini option, if you don't know, is just 10 shares, right? Versus one standard contract, 100 shares. To this day, today, now you guys probably know how big I play. Today I trade about 30 to 50 contracts at a time. I'm currently holding like 30 contracts. So that's about 3,000 shares. So that's the size that I'm at. I'd like to one day scale up to like 100 contracts. That'd be awesome. But it's slowly scaling with knowledge and confidence and experience. I believe the financial market, if one knows how to analyze and understand deeply, is the key portal to the world's latest education, or at least in real time. when you monitor prices, you'll see what the behavior itself is knowledgeable. So moving forward, I plan to keep improving my trading with better accuracy and position sizing, continue to extract world-class knowledge from these markets, as we discussed, the first 15 minutes of today, or 20 minutes, and explore other areas I have not touched. Ideally, with time and practice, one should become better. So I still want to talk about other things like advanced topics like wave theory and harmonics, harmonic trading patterns, if you guys haven't got that far. But that's something I'm interested in learning more. And also algo trading. Just because it's gotten to a point where it's pretty automated in my head at least, or I'm pretty comfortable with trading. So it's lightweight. Networking activities, so mixers. Dr. Yang, the technology guy with all the connections. I had a dinner with him this week, and he has a lot of investors from China, and they're sitting on some funds that they want to deploy. I think, if I recall, he said 40 million. I don't know. But he's leaning towards starting an incubator or an expert group here in Silicon Valley, because he has a network, he has all the engineers. He's not too business savvy, right? So I guess that's where him and I kind of unite. But if you guys have questions about that, I know SK did. Let me know, and we could talk further about that, because he wants to go. He wants to take things to the next level, because his current startup right now is not. It got into a legal battle and it's not doing so well. So he needs to transition to a new strategy. So we're just kind of talking about that. So I plan to continue hosting these mixers just to expand my physical and local network. So our mixer is going to be next week. It's monthly. It's going to be the third mixer, if you guys don't know already. Though digital networking proves to be superior and low maintenance, in my opinion. So for you guys who come in here often, you guys know that I'm a big fan of digital businesses, right? We could look at SMBs, bizbuysell.com, but there are other websites where you could look at digital businesses which have way better operational efficiencies. We're talking like a 10-hour, 5-hour work week for like 200 grand income. We're not talking about sales, we're talking about income. So I like that type of that leverage, digital leverage. And you'll start to see it bleed into commercial real estate, or at least REITs, right? The top performer, believe it or not, are technology REITs. Weird, right? IT REITs, I don't know what you categorize a communications tower and a data center REIT, right? The traditional REITs would be like residential, office space, industrial, healthcare facilities, right, in terms of commercial real estate. But the more, the top performers apparently are like data centers and communications towers. We'll talk about that in a bit. So update on the Volatility Club, this meetup. It is, again, an alternative investment club. The club continues to be my weekly practice of sharing, building, and improving my interest in investing, so building up that investor community. My plan is to keep running these meetups to continue to hold myself accountable and make new connections with investors. That's in a nutshell. Anyways, let's jump to it, all right, guys? So we have about an hour. So is it Naveed, you said? Yeah, so you just came in. We completed like a global macro view in the beginning. If you have any questions about the equity markets or what we're seeing, we analyzed the U.S. markets to Asian and European. 415. Yeah, we analyzed those markets. Sorry, I just lost my train of thought. We looked at the VIX, we looked at commodities, we looked at metals, we looked at cryptocurrencies. We just analyzed around the world, see what's going on. And my takeaway for at least U.S. equities moving forward to next week, it looks okay. Things are steady grinding higher. So I'll continue to have a long bias. But moving into REITs. So today's session, if you saw, I didn't have any notes over here because they're all on this one tab that I have. All right, so commercial real estate. So you guys all know what REITs are, right? Real estate investment trusts. Or like you could get exposure to real estate in the stock market. The stock market's pretty darn godly, because you could get exposure to like almost any asset class. You get like leverage, financial instruments, triple leverage stuff. You could get exposure to volatility. You could get exposure to penny stocks, very tiny companies, or bigger than SMBs, but you could get all those exposures. But today's focus mainly is REITs. And I'll give you guys a sample filter on FinViz real quick, so that you get a better understanding of what I'm looking at or where we're looking at today. Because the stock market is so big, right? There's like more than 7,000 securities out there, just the US. And then we haven't considered like European stocks and Japanese stocks and all that. There's a lot of equities around the world, but we mainly focus on US equities because it has the heaviest weight in the world, right, in terms of index size. So out of the 7,000, today we're focusing on real estate investment trusts. So I'm gonna go down here and do a custom filter. Oops, wrong one. We're gonna do a custom filter, and we're gonna go down to all the REITs. So there's about this many REITs. So that's what I'm analyzing today, right? Just because we analyze almost everything else, like enterprise software, my favorite, right? That's seriously one of my favorites. Tech stocks are my favorites. Healthcare, I haven't dabbled too much, but it should be one of my favorites. But I'm primarily a tech momentum breakout trader. You guys know what that means. So we just filtered all the REITs, and then I'm gonna do top down. So today, all the tabs that I have open over here, right, are pretty much a collection of the biggest REITs in the market, and we're doing it by market cap, right? And I wanted to point it out that the number one biggest one is AMT, American Tower, and they're responsible for communications tower. So their clients are big giant corporations like AT&T, Verizon, Sprint. They pay, they lease those towers, and the commercial real estate or the REIT company is the tower company that gets the money. So we're gonna look at that. We're also gonna look at Simon Property Group. If you haven't known, you've been to Great Mall, you've been to Stanford Mall. It's owned by Simon Property Group. So they're the largest retail commercial investor, focusing on retail shopping centers, right? But there's also other retail stuff like maybe Taco Bell. I mean, there's another group that does that. And then we have Prologis. Prologis is the biggest logistic commercial real estate investor. Would you call them an investor or business? They focus on they're categorized as industrial commercial real estate, right? So this is, I'm giving you a little intro on like the categorization that they have here, right? AMT is categorized as diversified. They should start coming up with a category called tech REITs or something. I don't know. Because a very popular one is DLR, Digital Realty Trust. We'll get to that in a bit. The next one is PSA, Public Storage. That one's pretty big. I didn't know you could get so big in terms of like, renting out storage. That's amazing. So that's one of them. Next one is, this one's residential. I think I have this one open. I'm not too sure about this. Avalon Bay, another residential. DLR, Digital Realty Trust. This is a very popular one, or at least it's popular in my eyes because some of the biggest tech companies out there by market cap is like Apple, Amazon, Facebook, Microsoft, Google, and they all have a somewhat of a data center play, a technology play, right? Maybe like they have a flash array play, they have an AI play, they have maybe a robotics play. I don't know, but there's this huge macro trend that data centers are gonna, they're gonna keep going. There's demand for that because we all have sophisticated computers in our pockets now, and it makes sense to invest with this secular trend instead of going against the secular trend, right? Next is Welltower. This is healthcare facilities. So we'll look at these as well. And it's pretty interesting when you review the investor reports because they talk about, homes for senior citizens and all that. How they're kind of shifting their real estate portfolio, right? Like for example, Boston Properties down here. This one's into office now. So if you guys know the Salesforce Tower, the biggest building in SF, man, I went there. I went to San Francisco on Friday to meet two Instagram influencers who have like 200,000 followers, and it's just like these two girls getting deals. They got flown here to SF to do a deal, so that was one of my highlights this week, to meet them and see like, okay, like because I'm a big fan of LinkedIn right now, and I'll repeat, LinkedIn was acquired by Microsoft for $26 billion, one of their biggest acquisitions to date. You could look that up on Wikipedia. They'll show you a list of all their acquisitions, right? So I like to play it in a sense of, if Microsoft is acquiring something for $26 billion, if you're buying something, you anticipate that to be an investment, at least a big purchase, right? If you're buying a $2.2 million home, you're anticipating higher prices, I'm hoping, unless you're just buying it just to think that it's gonna sit at 2.2, something like that. So they're buying it at $26 billion. You know what, let's just show you guys, Microsoft's largest acquisitions, because this is great insight. So their second biggest one is Skype at 8. Oh wow, I'm wrong. It's 28 billion, right? So these are their acquisitions, guys. Right? Vizio at 1.3. So why would you acquire something for 28 billion? They're anticipating a lot of upside for this. At least they were fighting for this company with Salesforce. Salesforce was trying to bid that too. And if you guys know enterprise software, Salesforce is the tallest building in San Francisco, but they're not known for being the tallest building. But they pretty much are now in San Francisco. But basically, they are a enterprise level software, because I sell enterprise software as a day job, right? And I understand that segment really well. That's like the biggest game right now in the market. If you were to draw a spear, right, and you guys all know a spear or an arrow, right? This is a spear and this is arrow. If we're talking about deal size, now correct me if I'm wrong. We might have some deal makers or deal sourcers in here, but this is what I see. At the tip of the spear right now is software deals. Can anyone challenge me on that comment? The tip of the spear right now are software deals, meaning they're the biggest contract size with the best margins right now. That means you go chase those deals, man. Those are huge deals. Any comments on that, or did you understand what I just said there? Like, okay, so let me give you an example of like what I mean by big deals, right? If you see me chasing a cafe, my deal sizes are like $5, and I'm very dependent on volume. If you see me now chasing real estate deals, those deals on average are probably like anywhere from like 10K to 35K plus. So those are the deals I'm chasing. And I'll probably just need like 5 deals a year to be happy with that deal size, right? Now we want to scale it a little bit higher. What's the next big deal size? Maybe buying an SMB at 300,000, a cafe or restaurant at 300,000. So that deal size, that contract size, 300,000, right? Let's go a little bit higher to middle market. We buy like a little startup for, I don't know, a couple million, 20 million. Deal size is 20 million, right? Now we go a little bit higher to the next size, it'd be enterprise software sales. Or maybe selling a Boeing airplane. I don't know how much that costs, but the margin would probably be a little, like 2%. I don't know. I don't know what Boeing's margins are. Well, we do know, but I'm not going to look it up right now. But the next level is software. So right now, seeing how software, that market is so fascinating to me, that's where the biggest deal size in terms of business. Now, there are bigger deal sizes. Sovereign deals, big giant commodity deals. Those are probably the biggest. But maybe a step down that would be this LinkedIn deal or mergers and acquisition, Goldman Sachs level, right? Enterprise level mergers and acquisition. So a $26 billion deal. Can you imagine commission on that? Yeah, that's why you close it as a team. You don't close it as an individual. Right? You don't operate Goldman Sachs alone. You operate with a team of analysts and associates. But the structure in Goldman Sachs, I learned most recently, it's very similar to a real estate agent's office. Every office that you see right here is independently owned and operated. Well, even this branch is independently owned and operated. But each agent is responsible for their own deal flow. So you pick where you want to operate. At the investment banking level, each each partner has their own VPs and associates and analysts below them, and they'll close a deal as a team. But the deal, who hunts the deal? The partner. The partner knows all the executives, the high-level executives, knows all the valuation models. Like they're jaded in that, so they could go out there and hunt the deals. So those deals are very lucrative. I don't operate at that level. I like to talk about that level because my stock investments are dependent on that level, right? Imagine if you own LinkedIn and they got bought out. You'd be pretty happy. Well, no, actually, I mean, now I have to own Microsoft, which I like Microsoft as well, so not bad. So keep in mind, the tip of the spear deals out there, career-wise or job-wise, is software sales. At least that's the trend that I'm seeing, right?
So why it's at the tip? Why is it it's at the tip?
I'm sorry, what?
So you draw that R, right?
Mm-hmm.
Why you said that it's at the tip? Is because it's like more.
Oh, it's the tip of the spear because it's like the, what's the most popular show right now? Everyone knows Netflix, right? Like from me in like a deal sourcing world, like, okay, if you look at Goldman Sachs and their hiring trend, 50% of their hiring is like all technology investment bankers. Why is that? You want technology people who know how to broker technology companies, right? Because when you buy or acquire another technology company, there's a lot of sophistication behind it. There's you gotta understand the data. Who am I transferring the data to, right? It's not, you're basically a technology engineer, investment banker. Yeah, adding a lot of titles to that. So judging from what they're brokering, right, as a middleman, they're doing a lot of technology and investment banking. So that's the trend right now. So I have the assumption that software or technology biotech, that's also healthcare. That's like the tip of the spear right now, right? I think the next tip of the spear would probably be like AI, right? And then for the hardware world, tip of the spear would probably be robotics. But I know there are, a lot of Indian people in here are engineers. You guys probably know better than me on that, right? Correct me if I'm wrong on this.
I can just comment on it. Just
Yeah.
think about ratio between your revenues and cost of goods sold. Just cost of goods sold, nothing else.
Congrats with the water, okay?
Enterprise software, it's basically whatever you sell is free money. Cost of goods sold is zero. The same biotech.
So profit is high.
Yeah. It's much more complicated than that, but this is kind of a simple model.
After like so many sessions, you're kind of like, you get all spoken out or whatever. But yeah, so he's right. The COGS, on those deals are like awesome. We're paying engineers like 150 grand. Hey, it's well worth it because the deals are so big. And so, if I could dream big one of these days, I probably wouldn't. I'll probably grow a real estate agency business, but I'll cap out somewhere and jump over to software deals because that's where the money's at. So in the meantime, I'll just invest in software stocks. That's kind of like my thinking, right?
Smart.
Is it smart?
Well, I mean, Salesforce is in such a strong position.
It is. It is.
Relative to their competitors of ServiceNow and so on.
Yep.
And their earnings have been growing.
Well, hold on. ServiceNow is a different segment. That's more of a IT service, right?
Well, in the same area of focus of buyers though.
Oh, yeah, you're right,
So
you're right.
let's
Yeah.
look at the performance of Salesforce. What's to stop that from growing at least 5% per year for the next 2 years?
I think this one could go at 300.
Absolutely.
Yeah,
Absolutely.
I think it could go at 300. Now, that's not, investment advice, okay? This is a club. I used to be a financial advisor. I'm licensed, but I'm not advising. This is just, I quit that gig because they wouldn't let me talk so much. Now I get to talk as I could go get water and talk. But yeah, that's, Salesforce is looking very bullish. I like that one. Same thing with Splunk, Workday, Cyber, Team. Team is Atlassian, if I forgot. Red Hat. I mean, don't get so concentrated in a position, right? I also like Yelp, but Yelp is more consumer level. It's not enterprise infrastructure software. It's consumer software, right?
Interesting.
Yeah, Yelp is a platform model, and it's the margins are incredible, right?
Actually not, Yelp makes money from the enterprises, not from consumers.
They make it from
we
SMBs?
consume the content, but they make money not on us,
Yeah.
but the enterprises who
Yeah.
pay for this.
And a simple analysis as to why I really like Yelp is that Apple has a backing on Yelp. Because when you go on Apple Maps, there's a competition between Apple Maps and Google Maps. If you go on Apple Maps and you look for food, they push you to Yelp. If you go on Google Maps, you look for food, they push you to Google Food or whatever. So Apple, knowing that they have one of the biggest balance sheets, and they're just kind of like a stroll down the street right here. They're backing that one up. So at $3 billion, they could well afford, they could well afford Yelp. So I'm pretty disciplined on my position here. I added some more. I'm getting kind of greedy, but I think this one could explode. Now, guys, educational purposes only. Okay, like this guy sounds so bullish, and then you take a position and you lose money. Don't do that. Just you have to approach it with some thought. But my thought is pretty robust. Like, I think the most probable buyer is definitely going to be Apple, because why would you refer your foodie business to Yelp, right? So you're essentially indirectly investing in Yelp. So you probably have interest as well. And Yelp as a corporation, you read their investor relations report, are accumulating shares at an average of $40. So accumulate with the corporation. That's just another way to think about it. Okay, okay, it's about 1 hour. So let's go back to the REITs, okay? Because today we're not focusing on Yelp or the interesting tip of the spear type of stuff. We're focusing on REITs and purely REITs. So now that you understand that out there are many different types of commercial real estate strategies, right? There's not one that invests in all. Even though they say they're diversified, when I started looking deeper into them, the categorization of diversified is because they lack a category called tech or I don't know. Like tech-specific commercial real estate. Let's say this office right now. This would be an office category, right? You look at right across the street where there's Phil's, a hotel. Are there offices there? No offices. So that'd be more retail. But when you see office, residential, and retail, that's called mixed use commercial real estate. So just kind of get an idea. And the beauty of this is that these guys already successfully scaled in the public markets. So I can now jump in there and evaluate their efficiencies and see, imagine myself. Like a simpler example is Starbucks. You want to run a cafe, but you want to know how big can you scale Starbucks, and at that scale, how much you really make. Well, your margin starts thinning out as you scale. It's very fascinating to see these large $60, $50 market cap companies, commercial real estate companies, and how much money they make at that level, right? So let's jump into it. So we're pretty much going to analyze probably the top 10 today. Is it top 10? Maybe top 15. But I didn't pull every single one. I just pulled whatever I thought was interesting. So let's begin with the first one, right? American Tower Corporation. That's the biggest one in terms of REIT. I was so fascinated by this, right? Apple's the number. Let's think back. Let's back test. Why did they become so successful? Okay. Let's think about the macro trends that happened. So, as you guys know, Apple is the number one biggest company in the world. The first company to be 1.1 trillion. 1,100 billion, right? And they became widely successful. I think 60% was because of their iPhones. 60% of their sales are from iPhones, right? So why is the number? Does it make sense that the number one REIT is a communications tower? You see where I'm kind of backtesting that? And so the number one customer for the REIT here, or the communications tower, is actually like AT&T, Verizon, Sprint. So that's pretty interesting, right? Because AT&T, Verizon, Sprint, they distribute iPhones. So you get an idea of how big, when you become 1.1 trillion, there's economic ripples. And those ripples make other people rich. So that's what I'm analyzing today. How did this tower REIT stock become number one? So I think that part explains it. The popularity of everyone's mobile device, and we need to communicate 3G. Sorry, no, it's not even 3G. It's like 5G going to be now, LTE and all that. So this is the investor relations report. This is what the tower looks like. We're going to dive in. Let me know if I'm going too fast, but there's a lot of reports. I'm not going to look at every single number. I'm just going to give you an overview today. Today's a high-level overview of all the REITs out there and what they do and how they make money. We could probably look at the FinViz and see their efficiency metrics, financial metrics, just to see how well they make money. But the profile of the company, this is basically it right here. TEN is tenant, and then AMT is American Tower. So basically, this is what they own, and this is what they're selling. They own the pole and the land. Their tenants put all this stuff on it. So they make their money from the pole and the land. Pretty interesting, huh? Right? American Tower Corporation owns and operates a portfolio of about 170,000 communication sites. So they own these sites, which we lease to wireless service providers, broadcasters, and other communication service providers. So who is a buyer? AT&T, Verizon, Sprint. Let's see. As of June, our portfolio included 41,000 properties in the United States, over 129. I won't read it all. Let's skip ahead and see what there is. So again, high level, okay, guys? Their U.S. portfolio, this is what it looks like. Right, so the red is all the towers. So they mainly do towers, wireless broadcast, and then they have some smaller exposure to these other things over here. Okay. But isn't that interesting? Yeah.
They lease a lot of their land too.
Yeah. Land with tower or land no tower?
Land, and then they put the tower on it.
So
I have a property that they have a tower on.
On your property?
Mm-hmm.
Oh, that's interesting.
Yeah.
So what's it like there? So
It's
wait.
the worst cell phone service you could ever have.
But you got a cellular tower.
I swear to God.
You got a cellular tower. You're getting bad signal.
Terrible. The worst.
It's probably like your carrier is probably not with that tower.
No, they are.
They are? Okay.
It's just the craziest thing. You think, oh, that'd be.
So I don't think I don't think the physical tower is them to blame. I think it's the carrier that's to blame. The carrier puts the devices on it, right? Well, I don't know. I'm not a super expert. Again, high level overview today. But if you want to look at their international portfolio, they got exposure in every other site. But looks like the majority is India. did I miss that one? I'm sorry, how much was their US? US is 41,000 sites, India is about 76. That's pretty interesting. No, I didn't catch that the first time, but I'm just gonna scroll through real quick to show you guys the more interesting stuff if we see it. Because I know we might not have time to go through all of it today, and I want to just at least scratch the surface on some of it. Okay, so I guess that's pretty much it for that. Did you guys have any questions on these towers?
I just have a general question. Do you have a threshold for what PE ratios you tolerate?
I don't really look at PE ratios because as a practitioner in the markets, PE ratios could extend. Like just they'll let the PE ratios go out of control. But
Comparable though from one to another in like industries?
yeah. So we do look at like the S&P 500 aggregate PE ratio or the Schiller Price Index. So the ratio is about like 25.
So AMT's at 60. Does that concern you that it's 2 times their nearest competitor?
So I haven't looked at that specific angle. I only look at it from first. I look at the charts and what the market wants, right? So today's not about today's just a higher level overview of the business. We're not looking about how to take a position in the stock. Yeah. So I haven't looked at that the angle. That's why. Because we're just I want this to be like sort of a intro to like what do these commercial real estate guys do out there? Not so much how do we take a position. That was like all the other sessions that you weren't here. I'm trying to change it up today, so I apologize for that.
One last question.
Yeah.
Are there REITs for people like Keller Williams or retail property companies as well? Like, in other words, the people that sell residential property, are there REITs in that area?
Yeah. So you're talking about like Boston Properties?
Well, like, just speculating that the real estate residential market is sky high right now. Are there REITs that focus on that sector itself?
So, look, we got 12 pages of REITs, right?
Right.
I'm only analyzing the top tier ones today,
Okay.
right? So, but I would suspect yes, definitely, right? Because there's hotel REITs and all that too. Yeah.
With keyword residential, we will see some of them.
Residential.
Yeah.
retail,
Some of
So-
them
so
already
we're gonna-
partnered with
yeah.
some
Oh, right there.
We're gonna look at these two today: EQR Equity Residential and Avalon Bay Communication.
Okay.
Yeah.
All right.
So those are the biggest scaled residential, and we'll read a little bit about how they're kind of protecting themselves or how they're making money. But this one wasn't so. I mean, it is the biggest, and I had to acknowledge it. It wasn't too interesting for me, just because they're towers. Oh, did I hear myself? Oh, hey, SK. I thought it was me. What's up, man?
So basically, this then AMT is also like an infrastructure company
Mhm.
which is paying dividends right now because it has like monopolized like buying all these towers.
Yep.
But at some point, it would be like a mouse business, which are now running into losses, except for few like Simon and stuff.
Yeah.
So
Yeah.
do you see more of a seasonal like at what point they are in this growth phase?
Yeah. So to answer your question, I would. So we're gonna jump to digital realty next, and this is kind of jumping ahead. But to answer your question, you're right. They put all the towers there, and so they're like competitive in that sense. Because are we gonna? I mean, is the government gonna allow another tower company to like crowd up the space even more? So I guess you could say they do have a monopoly in that sense, and that really secures the value of their stock, right? And so that we could go in there and comfortably put our money without looking at it and then just eat the dividends. But I wanted to point this one out. We're kind of skipping ahead because right here. So during the financial crisis, right? This one is kind of highlighting DLR. I don't think we have AMT in here, but as you can see, the retail one, and it's this one Avalon Bay, the residential one, during 2008, they all took a dip. You see that dip? Well, a lift over here, but a dip essentially. But DLR, Digital Realty, did not dip in 2008, right? So that kind of tells me like some of these REITs can be shielded because these REITs aren't exposed to retail shopping habits, right? If you're a retail center or residential and 2008 hits again, well then it makes sense for them to kind of cut back, right? But these real estate or these communication towers and data centers, they exist purely for our communication or cell phone use. Even in a recession, we're not going to stop using these devices. We still need to communicate, and we still have to pay a premium, or whoever carrier still needs to pay money for that. So in a sense, it's quite robust. Just kind of skipping ahead. Did that answer your question? I take your,
To some extent, yes, but then, like, at what point do you want to enter them? Like, once the 2G and 3G networks are being established, then yes, they were a really explosive growth phase. Now that the market has consolidated, the same towers probably could use it for 5G as it is coming up along. It could be an advantage in the sense that they can use existing real estate, even though the services are expanding. But at the same time, it's like the mall's business. It was at an explosive growth point at some point, but now it's not as much attractive. And coming to the data center play, yes, they are exploding right now. So what
this,
phase?
I think this goes back to our discussion at the Milpitas Library. The Milpitas Library. It's been a while, but I really think it goes back to our discussion of, first of all, you have to point out that there is this, uptrend in technology, but it's the beauty between tech and hardware, right? So let's say my blue is the software, and my red is the hardware, right? So I think you're talking about like when the time of entry, right? Maybe when communication software is getting a lot more sophisticated and requires more advanced tower. Is that what you're asking?
I'm asking like in what growth phase the telecom is, and comparatively what growth phase this company would be in that aspect. Like maybe if you entered in 2000, then AMT was much more solid buy as compared to like last few years, where it's mostly consolidating. You can see stock prices. But if you see something like a DLR, it is exploding.
Yeah. SH, have we met before? Because there's like SK and there's SH, so sorry. Well, nice to meet you if you're a first timer here. But he had a comment: satellite communications will be competition in the future. Yes. So who owns those? Like Verizon and stuff?
So if satellite communication will be competition, what SH says, then it would be a negative story for the communication towers business.
Yeah. Maybe you're right. So that's another way to look at it. I guess that could be risk. So maybe with that being said, let's skip over to data center then, huh? I mean, if you see the risk in that, I'm just saying that's the biggest one. So it could be the biggest one to fall. That's a huge tower, huh? I don't know, SK. That's we're kind of talking about the next evolution of technology. But with the time that we have, let's jump on to the next one. And you guys know I talked about this one before. It's called digital realty, and they focus on same thing, commercial real estate, but they focus on data center. It's a data center play. So who are their customers? The other customers for the tower was like Verizon, AT&T, Sprint. This one is like Apple, Google, Workday, Amazon AWS. Someone has to provide the stuff for them. So we'll look at it into detail. So it's pretty interesting. This one was the most interesting to me. And then we'll jump into like more traditional real estate. I think you guys might have seen this one before, but when I looked at it, it looked really different, so I don't think so. So 198 data centers, 32 metropolitan areas, 32 plus million rentable square feet, and 2,300 customers. All pretty good ratings above that. Let's see, 3-year guidepost. I'm going to skip pretty quick, okay, and just highlight like what is interesting information. Go to market with customer buying behavior, global real estate reach, complementary product mix. So real estate expertise, expansive global reach, complementary product mix. Let's see, 198 data centers, 12 countries, 30. Okay, we saw that already. There. Let me see. This is right here. Okay, this is what I really geek out to, because the question is, what is a data center, right? For those of you in here who's not an engineer, and for those who are an engineer, then it'd be like a nice recap or a better visual. But this is what it is. There's layers to it, right? Just like how there are layers to software, layers to currencies. The building shell, the electrical systems, right? The HVAC and mechanical systems, and then the building fit out site work. So like the lobby and stuff, I'm guessing, yeah, lobby and entrance. That's a data center right there. That's how we use our phones and all that. And the more we use this, the more they gotta build that stuff. That's, in layman terms. Is this interesting, or you guys? Yeah. Okay, cool. What goes into the building? Majority of it is 40% electrical systems, right? And then the next chunk would be these two, building fit, site work, and building shell. Just, you could kind of back test or back analyze who will be the economic providers of all this, right? Generator, batteries, power distribution unit, all that. So that's what takes to build a data center. Skipping ahead a little bit, content and network, we won't talk about that one. Private cloud solution, okay, oh actually no, this one's pretty good. Public cloud solutions, infrastructure as a service, AWS, Azure, these are top names, right? This is about 1 trillion, is it 1 trillion? 900 billion? 500 billion if I recall, 100 billion, less than 100 billion. But these are world-class titles right here, right? Service providers, many customers. So I think this is definitely a very tech infrastructure play. DLR is, very stable because I'm looking at who are your accounts, right? Who are your customers? And this is their projection. So this was very interesting to me. AI projection, IoT projection, autonomous vehicle projection, and virtual and augmented reality. We all confirmed this in the many, many other sessions that these are global macro trends. Well, these are global technology trends, not macro trends. But AI is forecasted to, go this far. IoT, autonomous vehicles, and virtual reality. So I think they will be recession-proof, at least from, if these market opportunities really play out. And who's invested in, let's say, autonomous vehicles? NVIDIA, Baidu. I think Apple had a project called Titan, but they turned that into software now. But they're still invested in that space. They want that space to become a reality. Intel, autonomous driving, and also AI, and also IoT. Who else is also in AI? Well, AI and autonomous vehicles are pretty much could be the same, right? But there are other AI applications. Say again?
Google.
Yeah, Google. So I believe what they're saying. Their pitch, right? This is their pitch to me to buy their stock. I agree with those numbers.
I think one very important factor I believe in these forecasts are, I think they're extrapolating from the data growth that comes with these, right?
Yeah, so we could invest in like a MongoDB.
Yeah, but the assumption there is that all of that is going to move to the cloud.
It is, yeah, it is
And
an
that's
assumption.
not necessarily true.
Yeah, so
if there's disruption, for example, a lot of computation moves to the edge, the growth, cloud is going to grow, but probably not as much as they're forecasting.
For me to kind of reinforce my thinking, right? I want to see actual dollars being invested into this community. So top tier venture capitals like Sequoia Capital, KPCB, they're putting money into AI in China and all that. So they got skin in the game, and we know Apple, these big enterprises like Apple, Amazon, Google, Facebook, they have huge appetites. If not, their stock prices won't go up. Because when we buy their stock, we're hoping that they will go find upside because we're looking for a return, right? We're indirectly asking them to go find upside. So if I were to raise a pool of money for investors and start deploying capital, you guys are expecting me to perform, right? You're not just gonna give me money. Come on, it's just the economic nature of things, and so that's my backing.
Yeah. The point I'm trying to make is the AI is expected because there's a very high probability, right? And there's sort of funding going on. The question is, because of that growth, is the cloud going to grow proportionally or not? Right?
It could be.
I believe a lot of that growth is going to come on the edge side, and not all of it on the cloud. Right?
Yeah, the growth could overshoot or undershoot, right? Yeah. It could be like this. So that's the question. Yeah. Because we don't know, it goes by 2, 4, 8, 16, 32, right? We don't know how much that type of power could be. But I'm really gauging, I'm collecting data from like what more intelligent business entities are doing. So if you're at Microsoft and you're over 500 billion, you're more intelligent than me, I would safely assume. And so I want to do what they are collectively doing. So that's how I gauge the majority of my investment positions. But are you like working on a data center, or do you work in that environment? Just out of curiosity.
The wireless.
You're in the wireless? Okay, so wireless, Keysight Technologies, is it?
5G.
Yeah. So that's the market you play in. Yeah. So wireless. I mean, there's so many hot markets, right? Like memory, wireless, What else? Software. But that's interesting. We got a wireless person in here.
It's interesting that the chart of the AI and the autonomous cars, they go from like 2016 or 18 to 2025, while the others they only go to 2020. Is that because they cannot forecast that long? You see the IoT or virtual reality, they only project to 2020, not 2025.
Oh, okay, I see. Who knows? Maybe they. I don't know why they did that. That's, yeah. It'd be funny if you're on like an earnings call or during the presentation and the analysts or the investors presenting on their side, and you're like, hey, I asked that same question. They'd be like, oh yeah, you're right. That'd be hilarious. But okay, going back to it. This is their projection, and I had a comment on this. What was I gonna say?
It could be because it's quite uncertain that what's going to happen.
Yeah.
Like they are not very much sure about.
Oh, okay, I remember what I was gonna say.
It's volatile.
Yeah, it could be. You're right. It could be a maturity forecast where they think it will mature, and they don't want to forecast sideways, right? They want to show investors like, oh, it's gonna keep going up. Instead, the next one might be sideways, right? But I remember what I was gonna say now. Now, I have some friends or some connections who work in a certain role in like environmental regulation, right? So any commercial developer that wants to do something, blah blah blah. And so the word on the street is that they're building a data center nearby, where all our poop collects in the Bay Area. So, I mean, just by hearing that, it sounds like, yeah, the data center demand is there, and I think it's forecasted to pick up, especially with Apple coming out with the new, Max XS or more devices in more hands means more data center required, meaning more upside for data center real estate stocks. So I see it, I hear it. Ground zero. Let's see what else we got in here. Global platform. This is their exposure. Right, nearly 200 data centers across more than 30 metro areas. Okay, this is cool right here. Their customers are these top names, right? You want to buy something whose customers are like this: LinkedIn, Verizon, Rackspace, Equinix. Whoa, really? Isn't Equinix a competitor? Well, I don't know. I guess you could unite in a way. IBM, Facebook, and other Fortune 50 software companies. They are needing these guys. These guys are the go-to. They even got Uber up in here. Wow. So to me, this is pretty robust. And I mean, okay, let's do one fun entry timing on this one. DLR. If we were to consider a position this, I would take it now. Even with this crazy PE, right? Because I think this one's a dividend play. REITs are normally a dividend play. If this goes down to 5%, I think investors will buy at 5%. Because there's a expected appreciation on this. You see where I'm going? Like, will they let it go to 10%? Maybe in like a market, hard dip. But you got, I think the dividend gives away a lot of things. Like investors will hold this up to be like 3% maybe. I don't know. But this is the customer base. All top names, even CenturyLink. Wow. JP Morgan Chase. That's pretty good. And this is the I guess their funnel focused on real estate foundation, right? I thought they were an Equinix originally, but apparently they're the real estate foundation: scale, co-location, and interconnection. That's what they do. So if you imagine like the people up here, let's say there's imaginary people up here. These are the end users, right? And they are totally infrastructure. Same example would be like you go get groceries, right? But you don't get it at the farm. They're the farm. Right? So as long as we keep on going to the groceries, that inventory is being flipped on us. The farm is the infrastructure. So in a sense, they are the infrastructure. And real quick, I'm just going to mute somebody online. Sorry, SK, I don't know if that was you talking, but you're kind of... Okay, let me know if you have a question, okay? I'm just going to mute you guys. Okay, cool.
Just a comment, because
yeah.
In the middle here, so actually service providers, they're all technologically weak. They are all technologically weak. So if you really want to go, couple years, I'm involved with kind of data centers. The last couple years, probably growth in data center consumption was not caused by any things related to we need more room for our data, but for the thing that, okay, we have our data, we need to secure it somehow. And we have paid too much money to be compliant with all regulations. So for us, it's easier just to have data center, and let's say our data going to be managed, security going to be managed by AT&T, so it's their problem now. And it still is kind of current, I guess, trend.
Yeah.
But the largest players, the strongest players in this area are not these ones.
Yeah, I mean, I think they just put examples in that for the pitch deck.
People who put these together.
Yeah. But to me, when I look at this, I know like, hey, these companies like Micron, Intel, Nvidia, they got some upside. All right, so let's go over to the next one. Sorry for the amount of slides, all right, guys. I'll try to breeze through it real quick because we got about 30 minutes. So I want to make sure I cover all the interesting stuff. You guys are always welcome to kind of download this on your own. Let me know if you need help, and I'll get it to you guys. But I just want to show you the highlights. Let's see, Service Exchange. I think that's, oh yeah, this is the one right here. So during the last recession, they did pretty well. So that's nice to know. It's nice to know that you're kind of hedged in a sense. 13 consecutive years of dividends, so more pitching. I think that's pretty much it. Is there anything else over here? Other competitors in other states? Okay, but that's my typical routine for me to kind of do fundamental analysis. Let's jump to the next one. Now this one's a little bit different. We're not talking about the techie commercial real estate stuff. We're talking about buildings now, and these guys are responsible for the tallest building in SF, the Salesforce building, Boston Properties, or BXP. Super duper interesting when I kind of went through this report. So let's jump right into it. Let's see, 2.5 billion shares of annualized revenue, which is pretty cool. 200 properties. Well, okay, I probably won't read that. I want to show you the buildings if I recall. This was interesting to me because I wanted to think like a commercial investor or commercial developer, commercial real estate investor, whatever. This is their investment strategy, and it put a lot of thought into my head, right? So the investment strategy is actively pursue development opportunities. So just like sales, you got to hunt for the next deals, like deals. It's always the strive for that. Seek acquisition opportunities with value add characteristics. So they like value add, and this is a very common commercial real estate strategy, where the example that I gave you guys that my mentor became very successful or building wealth out of that was that he bought retail centers, so like shopping centers that are like 70-60% occupied, and he would just occupy it up. And in these reports, right, if you look over here on the right side, it says increase occupancy from 91 to 93%. That's a lot of money for someone at their scale, right? And so my mentor did the same model. Basically, he bought things, for let's say a retail center like, well, it's probably not 20 million, but in Oakland, he bought, let's say, something like the Phil's Coffee over here or the Starbucks Reserve area. He would buy the whole center for 20 million, and it's 60% occupied. So there's still value to unlock. And he'll hire like a power broker, like CBRE or whatever, go find tenants. And then he'll triple net lease everything up, right? And repackage it and put it back on the market and then get the margin. Same thing like a home flip. Just you're doing it with numbers. And is that a financial flip or an operation flip? Because in private equity mergers and acquisition, if you were to buy out a business or a startup, there's either the operational flip, which is like fire people, hire new people, new management, or processes, right? Streamline processes, or the financial flip, where, these assets are unproductive, sell it off. Or, there's, this land is worth a lot more, or these assets are worth a lot more, sell it, finance the next project. So there's many ways to go about it in like an organization, but it's all the same. I mean, at the end, it's all the same. You're trying to make some margin on like some opportunistic opportunity, but that's commercial real estate. And you see that same pattern repeat in many other segments. So super interesting. Now, the part that I really geeked out to right here is selectively sell assets to recycle capital. I was like, oh my gosh, like that is so interesting, because the concept of that is like this, right? Let's say time always moves forward, right? And as you move forward, you will acquire new assets, right? But as time moves forward, these become old right? 1, 2, 3, 4. As they acquire new ones, they sell off the old one, and use that money to purchase new ones. And I was like, wow, I was mind blown. And some of the new deals that these commercial developers are looking for, either new land to develop on, right? So you sell your old ones to go develop a new modern one. It's like leasing a car, right? You're like, oh, 3 years, not in trend, not in style. I'm gonna go, return that and lease another car. But they're doing that with commercial real estate or their portfolio. And if you guys notice, as you scale to their level, mathematics becomes so extremely important. It's so interesting that they're doing that. Did that sound interesting, or was it just me who's like whatever? Okay, cool. Yeah, I found that really interesting because you're always developing the new, and you never know. The next guy who buys your old legacy commercial property, those tenants might want to exit and go to the new hot one. Yeah? Balance sheet strategy. Well, that's typical. But the other one that I geeked out to was the increased occupancy, because every percentage for them counts very heavily. Geographically diverse across the strongest U.S. markets. Yes, we know that. San Francisco, about 16% of their portfolio. And then beyond, another layer would be like what type of customers, right? So Google is their customer. So that's pretty interesting. WeWork, consistently recycling capital. So that's what I was talking about earlier. So they're essentially trading. Yeah, I mean, like, imagine me trading like large amounts of contracts on like, I don't know, Amazon or Tesla. But now they're trading like large, like, commercial properties. It's just, whoa, mind-blowing. Here's a business park that they acquired. I don't know what they did on this opportunity to grow due to below market leases. So yeah, so this was a value add right here. They bought it out and charge all the tenants higher leases. Yeah, that's a value add right there. Let's see, preeminent developer with robust pipeline. So yes, they built the Salesforce Tower. So I went there for the first time on Friday, Salesforce Park. Highly recommend like a vacation spot or just like on a Friday go there, and wow, dude, it looked like okay, so like so in the park you're elevated and around you is all these glass buildings. It looked like you were in the future. Let me see if I can find those influencers real quick. Tasumi XOXO. I probably wouldn't be able to find them. So yeah, I met these Instagram influencers on there because my wife's into that. Yeah, I recommend checking out that stuff now. It looks a lot different. I mean, especially in probably like the few months that I haven't been there. More buildings to see. Let's see, active pipeline. So they always have to look for the next investment, right? You hire new blood into the corporation to go hunt for your next deal. Active development pipeline. So this is interesting because, it tells me like, look, Salesforce is about 1.4 million square feet, about 95% occupied. So very, very popular. Estimated cost per square feet, $807. Percent leased. What about here? Owner, they own 95%. Percent leased is 98%. That building is full. Yeah, that's really good. I mean, wow, they got 100% on this one too. So things that I like about this is, yeah, I mean, it's very interesting to see like, the world wonders they built or whatever. But there's a cooler part because it shows you some of the deals that they're doing here in California, Oakland. They're building this right now, MacArthur Station residences. So us on the individual level, how can we capitalize on this? If you know they're going to dump a big project, right? Whatever the cost of that project is, can we capitalize on these surrounding areas? Yeah, heck yeah, we can. I'm pretty sure the top CBRE guys or the top commercial real estate guys, they are looking at these public records or this public information. This is all public. Right? I'm not doing anything shady to pull this data. It's all public, and you guys could get it as well. I saw some interesting projects, and I wanted to share. So one was let's see, not this project in the pipeline. This one. No, not that one. This one. Station on North First. You guys know where North First is? San Jose, baby. 1.5 million square feet. We could look at it too. Just a little digress. Where is it? What's it called? The station on North First. On top of the $1 billion deal for Valley Fair, that was like a big deal. But this is the station right here, and this is what they're building. Let's do a little 1-minute video. So I don't know if you guys know where this is, but SK, I know you know. It's down Intel. right? So this is definitely probably mixed use. Actually, I don't see any residential, but I love these things, you know? This is the stuff that kind of inspires me to get out of the house and get a cup of coffee somewhere and start reading some finance books. Yeah. Just 1 minute, okay, guys? We're gonna get some more water. So I'm not like a representative for them, so I don't get any referral. But what do you guys think of that? Pretty cool, right? It's nice to know that that area has a lot of eyeballs on it. So this is what they're developing. North First, I think Zanker Road, between Zanker and North. You know where that is? Yeah, very very interesting. And this is a public company's development, and this is what it's going to look like. Very cool. And this is the location, in case you guys are wondering. All right, so can we anticipate real estate prices going up there? Potentially. Because, I mean, if it's offices, then work, and more people, want to live closer to their job, right? Or, with the BART station being built, more people want to BART all the way down here for a job or whatever. So, I don't see any slowdown yet. Besides the stock market in February, things look like it's ramping up. And, as I'm teaching these sessions, right? I'm becoming more confident that I need to go raise a fund and start getting deals. But that's, I would probably just work with people who are ready, who want those deals now. Anyways, that's what Boston Property is doing, and that's what I wanted to show you. We won't go into these geeky numbers today, just a high-level overview. Let's jump to the next one. Prologis, industrial. This one wasn't, did someone say something, Peter? Oh, okay, I think you're fine. Industrial logistics, real estate. Okay, there's no echo. Nothing much to say about this one, because industrials don't excite me too much, but it's worthy of talking about, right? It is a performing class. Let me show you historical cap rates, because if you're a commercial real estate investor, you have to really understand cap rates. We could just look at an image, right, and then you'll see. Let's see if we can find one image that shows you historically how are cap rates back in 2008 and all that. I think this is pretty good. Industrial, multifamily. So yeah, this picture is pretty interesting to me because it shows me like the different classes of commercial real estate and which one really performs, right? Because the higher the cap rate, the better. And it looks like the industrial one's pretty high. I mean, just something to geek out on top of like office, multifamily. Not saying that they don't make money, but multifamily seems to be so typically the easiest one to get in means more competition. And more competition means you gotta share your margins. So if you could educate yourself a lot more, break into more sophisticated networks and get the more sophisticated deals, then you got bigger margins just by competition nature, or nature of competition. So that's what I see. The more sophisticated you get, the better your margins are. I hope I could get pretty sophisticated one day. On scale brings unique opportunities. So I'm guessing this is the type of commercial real estate that they do. Some other example of the buildings. I see their buildings all the time when I drive around, especially in Fremont. They have a lot. But I just want to show you this stuff. So it's a topic that I'm not too interested in. Let me know, do you want me to talk more about this one? But we'll jump to the next because we got about 18 minutes left. I want to make sure we go over all of these. So that was industrial. Now we're jumping over to residential, right? These guys are called, what are they called? Equity residential. And they're one of the top biggest in the market. Let's jump down and see, why equity residential or their portfolio. So they have, locations in major areas, right? Look at this, 11,400 units, right? Let's see what interesting things I could kind of dissect out of this to show you guys. Because I did add this one in last minute. The ones I had were like digital realty, home ownership rate. Okay, this chart I recall seeing, it was pretty interesting. I think it's the last one. Average male, average female age. So home ownership, declining home ownership because of prices, I'm guessing. Prices going up. I think there's another chart though. Let me just go down real quick. Oh, this was interesting. It shows you, you know, demand for rental apartment continues to be strong, driven by the millennial generation. But baby boomers love urban living too. So this is what it looks like. I didn't know it was called, this generation was called the greatest, and then the silent, and then the boomers, I guess that kind of makes sense. And then Gen X, millennials, and then post-millennials. Pretty interesting. I'm trying to look for this one chart, so bear with me as I scroll down. Because sometimes, you know, I look at so many charts, I might have mistaken it for another chart on a different page. But let's go back to that other chart. Because I have two equity residential REITs in here. I need time to go over. This is historical average, 12%, 5,000. Rental household yet to be formed. Okay, anyways, this is what the home ownership rate looks like. So 2008, decline. Kind of funny. But 15 to 17, a little slight, you know, bounce right here, right? But this is what it looks like. So rentals are going up, or at least popularity. Let's jump over this one. This one's very similar. Another one, Avalon Bay, focuses on residential. But you see real quick the portfolio of what they do, and then jumping into the numbers. Let's see one. And then boring financials. Stock performance. Well, look at this building, guys. I only saw one of these buildings in SF that looked like this, but these things attract me in some weird way. I don't know. Well, I guess I can't speak much on the residential, but did you guys have any questions on that one? We'll jump over to the next. Nothing? So SX, let me remind myself what they categorize are. Let's see, ESSEX. This one is also residential. So I do apologize, I have like a few residentials in here. Some more communities. Diverse demand drivers. Location, let's see, what's this? California chronic housing shortage. Check this out. More than 15% under production. So we were talking about real estate prices earlier, right? And we also had a gentleman in here, I forgot which one. You guys were talking about the supply of living spaces here. This is what it looks like around the nation. California represents nearly 50% of the housing shortfall at approximately 3.4 million units. So this is telling us that people want to move in here, but there's not enough units for everyone to live in. So let's just kind of talk about, like, let's say a market pullback, market dip. The supply and demand economics still say we're pretty safe, or at least it's okay. So I think prices can still hold on top of interest rates already rising off a low, so people are still able to borrow. So to me, these things kind of reinforce prices being steady.
Absolutely.
Absolutely. Are you in real estate or?
Well, absolutely, but no, I'm in several, but I don't see any decline in the market anytime soon.
Yeah. Now, if you don't mind me asking, like, what kind of market do you practice on a daily basis? Or like, are you like an engineer or?
No, I'm retired, but
Okay.
I have several real estate properties and just regular equity investments.
Okay.
I wouldn't sell any of my properties
Yeah.
in a minute, no way.
Yeah. We, I really want to show this again since we have real estate people in here. Let me see if I can find it. So I wanted to show you guys this because we did this analysis last week. It's a repeat for the people who have been here last week. Actually, no, JC, you weren't here last week, huh?
No.
Okay, so this is the repeat. This is what I'm looking for the Bay Area, and this was really interesting to me. So if you look at the legend on the right, it shows you the estimated value of the homes around here. Right? So you see that, you kind of like, oh, I understand that one. And then you look at the turnover, most people are holding more than 15 years, right? So like I said, the economic rubber band's kind of stretched to the other side. But the most interesting one to me was actually the equity. Most people are millionaires on paper because most of it is about this color, more than 80% equity. So, I don't know. I mean, I meet people who want to exit, and I meet people who want to enter, but I don't see a reason to exit, right? I would say HELOC it. Get a home equity line of credit and go invest with that money or whatever. I don't know. Yeah, get a HELOC before rates go up, or is this interesting to you guys?
Is there a map of properties for sale?
Not for sale, but so the color blue shows that each owner is sitting on more than 80% equity. Right? And we could become more stalkerish, and I don't know if I'm comfortable showing you guys that, or you guys would be comfortable seeing that, but we could see so much information with this power of with tech. Okay, so here's an example. Well, no, that's a bad example. Let's close this. Let's do a slightly blue one right there. So you could get everything from, oh, that's a trust. Actually, maybe I have to open it up. So you could get everything from their social media page to their LinkedIn to their phone numbers to almost anything. For some reason, it's all public data.
Look
Right?
at that purchase for $65,000.
Yeah. You should see one that I saw. I saw a 106-year-old purchase for about that price and sitting on like $2 million in equity.
That's awesome.
It's incredible. But I mean, people always want to look for upside, so I'm looking for upside. I'm considered a millennial, right? Yeah, I won't go too much into these charts with about 10 minutes left. I just want to show you, like, I guess, some of their projects, or make you aware that there are other types of, this is residential, guys. This is what it would look like. Let's jump to the next one. 10 minutes left. So this one is Vornado. This one's diversified. I put this one in last minute, just because I thought, maybe more better, but we'll skip this one. This one's healthcare. So some of the healthcare commercial real estate is pretty interesting. They are pretty big. Actually, they are the biggest. And this is what they learned right here. Healthcare real estate landscape. Adult care, higher cost. The lowest cost is actually senior housing. Right? That's what they learned from operating their business. So post-acute care, you see long-term inpatient rehab facilities, skilled nursing, outpatient medical office building. So pretty interesting. This one is powerful demographic tailwinds. Check this out. Right? This is what it looks like moving forward. Whoa, is it going down? Huh. So more of this. Okay. Aging population drives healthcare spending. So I think this is, just the way I like technology stocks, and let's say technology REITs. I also like healthcare stocks, and I should also like healthcare REITs, just because these are very compelling numbers, and nothing's going to change, right? So I would recommend you guys checking these out. Just the timing right now, we don't have all the time to look at it. Because I want to close out at 12, probably get some lunch. I'm getting pretty hungry. And also answer any questions like you guys have, and maybe meet the new people, see what you guys are interested in. But this is basically what we do. We just analyze stocks. Today's more heavily on fundamentals, I do admit. Here's another healthcare one that I'm going to breeze right through. They have some cool stats. So this one is majority of their portfolio, right? Curated, high quality, diversified property portfolio. Majority of it, 29%, is senior housing operating, right? And then the next one is senior housing triple net. Oh, interesting. Medical office buildings is their next chunk, and then life science, health systems, loans, and then other stuff. But mainly these right here, these three. Just another top commercial real estate involved in the healthcare space. Jump into the next one. This one's hotels. This one's pretty interesting. I don't have much to say about it. I'm just really looking at the cash flow. At the end of the day, they're all the same, right? The same in terms of operations, like housing someone, putting a roof over their head. Probably not enough time to go over this. But it is a nice sight to see, checking all these properties. Simon Property Group. So this is the retail center, commercial real estate. This one was actually a pretty hot investment recently. What they focus on, again, if you guys know, they have prime locations around the world. Well, I don't know if the world, but around the nation. They own malls like Stanford Mall and Great Mall. So like these top tier malls, they own the location. It was just kind of nice exploring what they do. We look at their stock. This was actually a Morningstar 5-star. Was it 5-star? SPG. Simon Property Group. Hitting off the lows right here, 160. That 160 held and is bouncing up. We're looking at the monthly right here. Dividend was pretty strong. I think it was paying at this price over here is about like 6%. So that looked pretty attractive. Do you guys think that there will be a retail comeback? Because there was a retail recession. Because people weren't really going out and shopping. They were shopping online. But most recently, Amazon started opening up bookstores, and it started making me question, like, why would you go counter trend when everyone's selling out the retail? I honestly think that store, that they're collecting data, they're collecting subscriptions. They're not about, they don't care about the books or whatever. Well, they do, but they're there to kind of collect subscription and data. Just see, well, more data, but get people to subscribe to Amazon Prime. I think that's their strategy. And then also with the Whole Foods, right? You're purchasing physical. You're digressing from software and getting to physical. That's just something that interested me. Let's see what this one is. Oh, this one's another retail. Again, Taco Bell, AMC. Just same model. I can't speak much to this. I'm getting kind of tired, I guess. So my energy level is kind of dying, if you notice. So let's kind of close it out. So Equinix, same thing as DLR, but then I guess they're slightly different. They're not categorized as a REIT. So let me just show you that real quick. EQIX, if you guys want to look at that one. So it says REIT, but it's not categorized as REIT. But look at these numbers right here. Crazy, right? 7,000 employees, sales. Just wow. Okay, well anyways, with that, I think I'm going to close it out right here, just to kind of get your guys' questions and answers. I'm just feeling kind of tired. I got an open house after this, so I want to get some food in, right? How do you guys feel about it? First timers, or was it cool? Was it okay? Was it boring? Was it interesting? Okay, thank you. This was a bit new topic for me as well, because we normally talk about heavily in stocks. But how you guys feel?
First time coming in, really enjoyed it. When's the next one?
So I do this every Sunday.
Oh, every Sunday.
Yeah, this is the 87th session, if you don't know. So there's like it's a cool history. Oh, so I want to also, I guess, promote, but we're trying to throw a mixer once a month. Our next mixer is coming up next week. So I'm doing this to purely expand my network, meet more people, especially technology people. But this is our meetup right here. So what I do is, that's not it right there. So this is the meetup, 87 session today, as you see. And we normally do these mixers, and we get, a lot of entrepreneurs coming in. It's nice to meet them because it gives me visual on what people do in their lives and stuff. And we try to put out good food, probably be the same, right? We run it very mechanical, but just invite people out, have nice chat, helps me source deals, maybe, right? Because if you're a business owner, you think a lot about marketing, right? And I always say that, man, if you got an audience, you don't have to pick up the phone and call for deals or email for deals, right? You don't have to coordinate deals, because you could be like, hey, this is Warren Buffett. And the other person on the other side would drop everything and say, yes, Warren Buffett, what is it that you need? But, that takes time, right? Reputation takes time to develop. This is a event that him and I are, kind of co-hosting. And it's mainly technology people. If you guys want to come out and network.
When and where?
It's going to be in this office next Saturday from 3 p.m. to 5 p.m. Yeah. Yeah, so I don't know if that fits your schedule, but I don't pressure people to come. Just come as you please, because that's probably the best time to chit-chat with people, because they want to be there, not because they don't want to be there. Other else than that, that's pretty much all I have, guys. Let me know if you want to see more real estate insights. I'll try my best to give you more insights. But yeah, next week we're going to continue looking at securities. My apologies for those of you who were probably hoping to hear more about stocks today, but all we did was like a global analysis and jump into REITs. Just a high-level overview of REITs and how they're making money.
Excellent.
Yeah. Okay, guys. Let's see.
Next week, is it going to be the basic stock thing?
Yeah. I'll share the PDF SK. So what I did was we've been running so many sessions. I used to do really customize and really push the content, but it got to a point where my schedule is a little booked now, and I want to streamline it in a way where it's also including first timers. because I noticed that when I would host this, right, we would get a mix of like very beginner and very advanced, and then it's like, how do you communicate in a way where it's productive for everyone's time? So I try to make these meetups very productive. If they're not productive, then I am probably not in the right spot. I should be somewhere else. But overall, that's it. So thank you guys for coming. Let me know if you have any questions. Yeah, hey, thanks, man. Hey, don't need to applaud, but yeah, it's just another week. Yeah, thanks, guys. People online, thank you so much.
So every Sunday, this location?
Yeah, so it used to be in the Milpitas Library. It just got to a point where, I don't know, I got the real estate license and then I ended up here. And it's a nicer room.
Good facility.
Yeah, so. Hey, Jeff, thanks for coming out, man.
Hey, you bet.
Yeah.
Good seeing you.
Yeah.
Good luck today on the open house.
Hey, thanks, man. It's just, it's another day. Yeah. Do you
So
guys
that
have any
that
questions?
FinBiz, I'm Bernard. That FinBiz page, are you showing the content based on a subscription?
Yeah.
So if you don't have a subscription, you get just a subset, or
You'll get ads on it.
you'll get ads on it?
Yeah.
Okay. Oh, that's very good. And that other one you showed was adpropertyradar.com?
Yeah, that's Property Radar. That one's like $800 though.
Oh, you have to subscribe to that too?
Yeah, I mean, you got paid for this data.
Okay,
But,
no, I understand. And then
yeah.
the Real Vision one, which was that?
Real Vision is probably, oh shoot, I forgot. I think it's $150 a month.
And what is that one? Which
That
one
one's
was
all about money management. Like big global hedge fund managers, they talk about it.
And
Yeah.
Guru Focus? Which
Guru
was that?
Focus is for deeper equity analysis, so we can get 30 years of financial data.
And that's a subscription too?
Yeah, like let's say when you go to Yahoo Finance, you only have like a snapshot of the
I understand.
financials. Yeah, you want like a 30 year, just to kind of gauge. Like, it was so interesting because we pulled Amazon's 30 year, and we found out that they were hiding all their earnings and assets.
Do you read Barron's?
Yeah, yeah, I read Barron's as
How
well.
about Investors Daily?
IBD?
Yeah.
I like them, but it's just, one can only subscribe to so much.
No, I understand. So
I like them.
Barron's versus Investors Daily?
I think IBD is more focused on like opportunistic security trading,
Okay, yeah.
right?
That's very good. I
Barron's
really
is
enjoyed
very,
Yeah, Barron's I found it spectacular.
Are you doing any real estate deals or?
No, just ownership through various different means.
Yeah, so I'm 27. I'm trying to, I guess, meet more people, and I'm meeting with a developer next week. So this gentleman, I don't know if you know him. His name is Greg Bunker. He owns the Silicon Valley Business Center in Camden.
No, if you're doing this kind of trading at age 27, it's spectacular.
I try.
I wish I only started at 27.
I try, man. It's just I got inspired early on by a hedge fund manager who taught me how to trade volatility,
It's great.
and it kind of evolved to this. So I went into Morgan Stanley, but they restricted me from doing this. So I left and started this. So this was born out of my frustration of working under a brokerage house.
No, I've just met people who are between 30 and 60, let's say, who have no idea, like haven't invested at all.
Yeah,
And are just missing out.
Yeah, I hope all this knowledge begins to compound and snowball into something like a fund, where I'll be the deal sourcer or money manager.
Good for you, that's great. That's really good.
That'd be ideal.
Thanks, it was a good session.
Hey, it's Bernard.
Bernard.
Nice to
No, I'll definitely come in again.
Hey,
I'll
no
come in
problem.
next week, too.
Yeah. No pressure, okay? I don't try to sell anything.
No, I just thought the information.
Thank you very much.
The only thing I would suggest is if you're to have more of an agenda for your.
Oh, yeah.
It's just structured a little
I
bit
know.
more.
Yeah, my schedule's pretty packed, and so before we would have great structure, I'll tell you that.
It was very, very good.
Thanks, man. Really appreciate it.
Actually, nice meeting you. That was very informative. Thank you. Your name is,
Perfect.
yeah, okay.
Oh, absolutely.
So what brought you out?
Crazy to sell that.
Anything particular?
Well,
Well, I mean, in terms of the trading, I would say that's my hobby. I've been doing that.
400,000 over
Yeah.
asking price. And they
Okay,
have
what,
multiple bids, I mean,
what area are you focused on?
I just a little
Biotech
bit
or tech or?
experience.
Tech is obviously I'm more familiar with.
You know, like I look for
Okay.
the
So
building
tend to
and housing index.
more.
No, I don't think, I
So,
really, I just have
So in a nutshell, I'm a daily,
I
just swings and trade.
I just wouldn't recommend
I
selling
see, yeah,
anything.
that's what it seems like based on your presentation.
Yeah, that's just pretty much it. I'll do mean reversion from time to time, like something that's too parabolic.
Yeah.
Maybe get short. Not so much. I also play volatility. But volatility hasn't been so popular as the most recent.
That's right, yeah.
Yeah, because XIV is gone. That was like the spirit of choice.
Actually, I'm looking at that VXX maybe
Okay.
it's time to
Short it or?
No,
To
it's
go long? Oh, you
no,
look at
that,
that. Oh, wow.
that's a risk, right, but,
What I learned from looking at volatility is that ultimately S&P 500 is more predictable than volatility.
Well, if you wanted to speculate,
Because
you would buy
I think
houses.
volatility is kind of lag
You know, there were houses that were
Well, if you
selling
look at Volta
for
futures curve,
$65,000.
Yeah.
Yeah, so we look at that as well, we try to, I mean, I am subscribed to a model, it's just an algo that gives me alerts of when things go into contango backwardation.
Then it broke below the 20 MA,
Yeah.
it came back to 20 MA and crashed.
Yeah, hey, I gotta take a
So
call.
it's a big problem
Yeah.
across the
Yeah.
line, 20 MA. If you broke below the 50, I
Hey,
don't care where you are, it's gonna go down, right?
I'm cleaning up right now.
We're up at
Yeah.
20 MA right now.
Yeah, I'll look at your text in a bit, I'm gonna clock out, say, bye to everyone.
It's something for you to look at.
Yeah, what's going on?
If you can see the whole entire, everything developed right in front of your eyes.
Okay,
Yeah,
alright,
Okay, thanks.
okay, see you, Bernard.
Thank you very much.
Yeah, you're welcome. Okay, yeah, I'm gonna leave to the place right now then. Okay, alright, bye-bye. What's up, JC? It's just you and me, man. Yeah, I'm gonna log off right here. People online, thank you so much for coming out again, alright? We'll catch up again next week, as usual. Thank you, Kay, great info. Neo Steve, you're back. Hey, Steve, well, offline already. Let's see, Peter, thanks, guys. Should be in person next week. Okay, Peter, I'll see you, man. I'll see you guys, alright? Have a good one. Enjoy your Sunday. Beautiful Sunday.